Wow, that's Suasu. Okay, okay, right. My face shining. Okay, good. Okay. Good evening, ladies and gentlemen, from YouTube as well. Wow, it's 50 of you. As you all come in, wait, I'm adjusting my table a little bit. Okay, okay, okay. So please download the slides, and I'm about to start the talk. Okay. Yes. Wait, a bit too low. Okay. All right. Cool. Wait. I adjusted a little bit. Thank you. All right. Cool. All right, good. Okay. First of all, thanks everybody for the well wishes for Kate Lu's birthday. She's 21 right now. Very happy that she has turned 21, and a very sweet, smart girl. You know, and she's having a time of her life. Okay. Yes. For people who just came in, tonight is a very interesting talk that I'm trying to give on what I think is happening to the stock market. Okay, so the title of my topic is market up, because the whole market is now rising like crazy. Okay, a lot of people say, "Ayah, Mr. Lu, that time you buy, I didn't buy with you." Okay, what do I say, right? Okay, those people who are on Facebook, the ones who go to YouTube, is 1M65YT plus 1. Okay, 165YT plus 1. Thanks everybody for liking. Yes, okay, thanks everybody for liking the thing. It will go far to promote the channel. Okay, so once you have downloaded the slides, please let me know, and then I'm ready to start. Okay, all right, good. Okay, once you download the slides, say I'm ready, and then I will start. Okay, all right, cool, and up. Oh man, okay, okay, yes. Wait, I'm also opening up my slides, and okay, and where am I? Yes. Okay, so the title of my slide is market up. Okay, is the crash over? Okay, yes. Okay, at 21 years old is a business owner. I was a poor student when studying at 21 years old. I don't think she's a business owner, but yes, but she's clearly have an entrepreneurial passion. Thanks everybody in YouTube for liking. I really appreciate it. Okay, tonight I think it's a very important and serious talk that I'd like to give, but no need to be so serious. Okay, yes. All right. Okay, so for those people who watch the YouTube video after my live, okay, thank you for watching it, but do take note that this is a live event. Okay, because it's a live event, don't expect the same type of YouTube videos that you see in other YouTube videos. We let the audience come in, there's a lot of interaction whatsoever. Cool. Okay, once you're ready, please let me know. Slides plus one. Okay, crash over liao, cannot buy. Okay, I'll be talking about that. Okay, so to start off, I want to ask everybody who bought shares during the crash over the last 3 or 4 months. Who bought? Say me. If you didn't buy, say I didn't. Okay, it's okay. I just want to have a poll. Okay, I just want to have a poll. Okay, and there's no right or wrong in this. Doesn't mean you buy, means you right. Okay, me. All right, good. Okay, me bought. Wow, so many people buy. Okay, me. Wow, YouTube, a lot of people buy. Okay, that's why you all should join my YouTube channel. All right, okay. So for those people yeah, okay, me. Wow, not me. Okay, I didn't. Okay, so a lot of people, a bit only. I bought last week. Okay, so a lot of people in YouTube are buying, and they're buying. Remember, like YouTube. Thank you. All right, good. Okay, me. Okay, bought, but I think the market will go down more. Okay, I didn't. Me. All right, good. There's a lot of people who bought, and there's some people didn't buy. There's no right or wrong in this. Okay, I say again, no right or wrong in this. The advice I give you is not a purchase. It's not investment advice. Which let me first now talk about. Okay, disclaimer. The disclaimer is in the slides. You all have it. The disclaimer says that this one is for entertainment and for education and not for investment advice. Okay, don't just count pay. Win or lose money is your business. Okay, all right, cool. Okay, I bought. Wait, something went wrong. The YouTube. Oh no, please. No, something died. Oh no, something died. Something died. Xiao Zuzu, please come out, please. Oh no. 大猪猪, yes. All right, okay. All right. Oh no. Sorry guys, I don't know what happened. It just died. Okay, wait. something wrong with the... wait guys, I am trying to rescue the internet. Yes, alright, cool. Alright, cool, okay. Yes, sorry guys, the internet just died, okay. That's why it's important for you all to go to YouTube. YouTube when I do a finance talk, okay. Yes, okay, sorry guys, okay. So can you give a blast of light so that I know you guys are there. The internet just died. I mean the hotel Wi-Fi just died. I don't know why. Okay, cool. Thank you. That's why the YouTube. Yes, thanks for giving likes. Okay. All right. Okay, let's start. Okay, let's start. Okay. Over the last 1 week, S&P 500 and the Nasdaq has gone up pretty strongly. Okay, pretty strongly. Okay, and for the Nasdaq, it went up by about 7% over the last 1 week. Yeah. Okay. Oh shucks, I put the same slide. It's supposed to show Nasdaq and S&P 500, but sorry. Then the S&P 500 went up by roughly the same amount. Sorry, I supposed to cut and paste. I cut and paste the wrong one. So both the S&P 500 and the Nasdaq went up roughly by 7% within 1 week. I think it's quite phenomenal. Okay, which means it's quite a big jump. Okay, yes, quite a big jump, and that's yeah, and that's quite a big jump, and I would like to encourage myself that it's a good sign. It's a good sign. Okay. Wow, Endowers also join you live, is it? I didn't know. Okay, the Endowers join us. I don't know. Okay, if Endowers join us, let me know. Okay, so just to say again, everybody is better experienced on YouTube side of things. Okay. So everybody is asking, can buy now or not? Is it too late to buy? Will it crash again? I think that's the key. That's the key question that everybody has. Okay. Yes. B, there's a tang 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 sound that you're giving. Yes. So really the question is it what we call a bear market rally. What's called a bear market rally? A bear market rally says that it's actually crashing. A bear market is a crash, but within the bear market you have spurious spikes and things like that, and we have experienced that quite a lot in this bear market. Okay, so is it a bear market rally is what we are experiencing now. Okay, and let me show you what's a bear market rally. Okay, I pull out 2 examples of what a bear market rally is, and there are many of them. Okay, the biggest bear market of all time, okay, the biggest bear market of all time is of course the Great Depression. Okay, this is the 1929 Great Depression. It lasted for many years, and within the Great Depression itself, it's not like that. No, it's so there are point, but the whole trend is going down. So if you think that when you buy when it goes up, more likely you'll be disappointed that it crash again. You buy, crash again, buy, crash again, buy, crash again. So it's very painful. This is called bear market rally. That means it rally within the bear market, and this is what you hate most as an investor. So you want to avoid a bear market rally, and the bear market rally can be quite significant. You look at if you look at the chart, the first bear market rally went up by almost 50%. That's quite a lot, right? The whole market shot up by 50%, then it crashed again. Then went by 12%, then it crashed again. Went up by 21%, then it crashed again. Went up by 27%, and it crashed again. Went up by 35%, and crashed again. Went up by 72%. I think this is the recovery already. So the 6-7% that we are experiencing right now, is it a bear market rally or is it a real rise already? Okay, that's the key question right now, right? Everybody do want to buy, okay, if it continue to low side, right? Okay, so and a lot of people are saying, no, it's a bear market rally right now. Okay, yes, thank you for the first time coming to watch. Yes, thank you. Okay, so for those who just came in, and remember, give a like. I really appreciate that. Okay, really go a long way in promoting the video. The second one is a bit closer to home. It's called the Great Recession. Not closer to home, closer to our times. It's the Great Recession. The Great Recession happens during the great financial crisis of 2007 to 2009. It was a huge crash. And in a great recession, there was a lot of bear market rallies. The bear market rallies There was one in 9 days, it went up 3.7%, then 8.1%, 6.5%, and there are 15% and so on. So there are a lot of all these bear market rallies that happen as well. So the question really is, Mr. Lu, what if I buy now and then it laosai again? Yeah, what do we do, right? We crash again. You know, is this a bear market rally? You know, or is it now a reversal of a trend? Okay. Henry said quite true. A month ago happened the same thing on S&P 500. Rally for 1 week and then further down. Okay. So let's take a look at the macroeconomic picture first. Okay. Macroeconomic picture. No, I just want to make sure that everything is working on Facebook, because my Facebook here seems hang. So I want to make sure everybody is okay. Just let me do a quick check. For those people who just came in, yes, all right, cool, all right, good, okay. First, maybe let's analyze why is the market rallying. That's the first most important question, right? Why is the market rallying? Okay, and once we understand that, okay, maybe it gives us a very big clue whether this rally was sustained or not. Okay, so let's look at the macroeconomic picture. Why is the market rallying? Okay, first of all, okay, there are signs that the inflation, okay, is now softening. Okay, signs that inflation is now softening. The world stock market is now rally. Okay, the world stock market is now rally, and the Treasury yields are now fall on inflation data. Let me read to you an extract from an article. Okay, global stock market enjoy a broad-based rally on Friday. Okay, as it shows that consumer spending, although it rose in April, but the uptick in inflation slowed down. Okay, and signs that now the whole world economy could be on track to grow this quarter. Okay, now although inflation continued to increase in April, it was less than recent months. Okay, that's good sign, right? That's good sign. So the inflation, the mother of all problem in this crisis is this thing called inflation. And inflation was really the root of all problem. When there's inflation, it drives interest rate up. When it drives interest rate up, all the growth stock and all the stock market will crash. Okay, so therefore, the whole world stock market reacted to a possibility that inflation, okay, is beginning to have signs of taming. Okay, and I thought that's quite important. Let's look further down into this. Okay, so there are signs that inflation is taming. So there are S&P 500 Dow, okay, snap the losing streak, and all this, lots of articles coming out. Okay, stock market closed sharply as inflation is lower than expected. Okay, so that is now a global acceptance that there is a chance that inflation will slow down now. Okay, and if inflation were to slow down, then we will have a problem. Then we have a good control. Okay, there's increasing sign, okay, of an economic slowdown and a recession fear. Okay, there's an increasing sign of an economic slowdown and recession fear. That should be bad, right? You ask Mr. Lu, yeah, isn't that recession is bad? Okay, but what drives the stock market now to crash is not the fear of recession. It's the fear of interest rate rises. So if the stock market, okay, sorry, if the inflation now is going to be tamed, then the Federal Reserve will not have the impetus or the urge to go and increase the interest rate. If it doesn't have the urge to increase interest rate or don't increase so much, then then the whole stock market will have a strong rebound and recovery. Okay, so right now, recession fears is actually in the horizon right now. Okay, let me give you signs of it. Okay, there is now in US a retail slowdown. You have the slides, you can look. Okay, and let me just read to you. Okay, that right now Walmart, which is like a biggest supermarket in US, and Target actually now have earning misses. They are now have earning misses. And a lot of the analysts and economists are now saying that 2023 is going to be the year of a downturn. If you are the Federal Reserve, which is the central bank, you look at this thing and say, okay, very careful right now. There might be a possibility of recession. If I go and increase the interest rate a lot more, it might drive a recession. So that part of it, all these are surprisingly good signs. Okay, there are increasing talks that actually the Federal Reserve has done enough. Yeah, okay, Federal Reserve has done enough. So there's this article written, I think, by CNBC or something like that. The Federal Reserve may have already done enough to cool the market. Let me read to you all these points, okay? The first thing is that in US right now, although in Singapore the housing market is chonging like crazy, but in the US market right now, the home sales, whether for new houses or for old houses, are beginning to slow down. Hey, for those people on YouTube, please like, please. 400 of you all, less than half of your like, please. So the US mortgage application, okay, has also slowed down. Lumber prices, which is the wood prices, which has crashed twice this year. Which have risen up last year a lot, have crashed twice this year already. Wood prices have gone down. Retailers are now grumbling that they have a lot of inventory, cannot sell. A lot of inventory cannot sell, and now this inventory is now accumulating the store in the warehouse. Jobless claim in US, there's this thing called jobless claim. Jobless claims are now having a mild uptick, meaning that there's increase in people claiming for unemployment. Okay, not a lot, but now increasing. So with all this thing all together right now, there is actually a problem. Okay, there is actually a problem. So with this, these are what is bad for economy is good for stock market. It's very funny. It's bad for economy but good for stock market, because when the stock market knows that the economy is now cooling off, what happened? When the stock market is cooling off, then the interest rate, okay, the risk of inflation won't be so high. Therefore, the risk of interest rate rises is now minute. Okay, so therefore, collectively as a whole, there's a lot of consensus that, hey, Federal Reserve now has done enough to cool the market. Okay, yes. Thanks for all the likes and continued likes. I realize this formula by YouTube Live is very clear. Okay, it's very clear right now. When you give a like, the YouTube will increase the video by 2 times. Okay, basically let more people know. Every like you increases more people to view this video. That's all. It's a like-driven video. It's a very strange algorithm. That's why I keep asking everybody for put like. You don't put the like, there will not enough people to view. It's an algorithm thing. It's a machine thing, right? So that's why I ask of you all, please do your part. Okay. Thanks everybody as well on Facebook. I really appreciate this. So there's also another thing that's quite interesting, right? The China economy now, there are signs that it's slowing down. You see, the minute you give a like, the viewership goes up, right? It's a YouTube thing. The Chinese economy right now is rapidly slowing down. Okay, it's reached a level of crisis already. First time in history of China, since 1976, the US economic growth have now outpaced China economic growth. So US economy now shoots up faster than China since 1976. The whole Chinese market is now cooling off. Whole Chinese market cooling off. It's a very serious thing, right? It's a very serious thing, but it contributes tremendously to alleviate the inflation fears as well, because China is a big buyer of goods and services globally as well. So if they buy less, like the oil, now the Chinese economy now slowing down, oil demand also slowed down. Okay, oil demand also slowed down, so oil prices now have gone down quite a lot. Okay, not enough, but quite a lot from the peak. So the other thing is that the zero COVID policy is still causing a lot of pain and harm. That's why a lot of people right now, a lot of people right now in China, okay, are more restricted, more careful in what they spend and things like that. As a result, inflationary pressure is now taken off a bit. All we want to do right now is fight inflation. Never mind a recession. Recession is another problem for another day. You kill the inflation fears, you stop the interest rate rises, the whole stock market rebound, which is what happened now, what is happening now. So I hope you understand why the stock market now have a big rebound. Okay, at least you understand. If you understand, please say yeah, I understand. Okay, I understand, or click a like, especially those in YouTube, so that let me know that let me know. Okay, what is going to happen to my China stock? I don't have a good feeling about it. Okay, I don't have a good feeling about it. So if you understand, please let me know. Just say yes, I understand. I can go on the next point. Okay, at this juncture. Sorry, let me get some water. At this juncture, as any question, I'll take some question before I go on to what the Federal Reserve might do next. Okay. Okay. One have any questions so far? I'm happy to take some questions before I go on to the next part. Okay. Meanwhile, we'll continue to like. Okay. Yes. Tammy, very good. Understood. Now the issue is at hand is recession. Okay. Recession fears are not so immediate. Okay. There's a pipeline of bad news like pending food and energy crisis. Yes. Okay. But I think those are already built in the market because we're hearing that already. China property is still going down. China market stimulus coming out. Safe property market first. That's where they're capitalized probably. Do you think inflation really slowing? Inflation rate is slowing, but inflation rate means the rate of increase in prices is slowing, but it's still increasing. You need to understand, inflation always refers to the rate where prices increase. So you will still feel that prices increasing, but it's increasing at a slower rate. Okay. Yes, China don't care about stock market. I really think so. I agree with you. Okay. Got it. So can we conclude that those who didn't buy stocks last round have missed the boat? Wait, that's the next part. Okay, that's the next part of my talk. Now everyone, think of everyone. Think everyone just ask yourself, the last weeks, do you spend less? Exactly. Okay. When will the Ukraine war end? Esther, I'll come to that as well. Okay. Is it still considered it is still considered a bear rally? We'll think about that. Okay. Yes. Okay, good. Now let me go to the next point. Thanks everybody for liking, especially on YouTube. That's where I need my most like. Okay, so that more people will view. For those who are joined for the first time, please remember to click follow and subscribe. Okay. All right, cool. Yes. That's right. Give 400 likes, then Mr. Lu will start talking about good stuff. Okay. Yes. If there are 400, if there are 400 likes, I'll tell you my investment strategy for next few days, next few weeks. Okay. Yes. If not, I'll just talk about economy. Okay. Anyway, is it a good time to buy bonds? Yeah, I can answer that as well. Okay. I think the most, as joke aside, let's talk about, okay, here. What should the Federal Reserve do? And I've got a picture of this picture, very nice. This person looking at the devil in the deep blue sea. Okay. Really, right now, the crux of the matter right now is between the devil and the deep blue sea for the Federal Reserve. The most powerful man in the world right now that we all are counting on is this Angmo guy here called Jerome Powell. Okay, Jerome Powell. He's a Federal Reserve chairman, and he now is faced with two options. Two very difficult options. Number one, okay, the first option that he has is what we call slam the brakes, okay, which is essentially what he was doing for the past few rounds. He increased the interest rate like crazy, 50 basis points, which is 0.5%, for 2 rounds, and really, hit it really hard, send a clear signal, demand need to slow down. Was he successful? Okay. Yes, I think it was quite successful. Demand is showing signs of slowing down. The risk of that is when you slam the brakes really hard, what happens? The interest rate rise causes a huge pullback in the economy and it induces a recession. Okay, it hit it really hard, the whole economy collapsed. That's called hitting the brakes, slamming the brakes. Okay, who did that? Paul Volcker during the 1970 oil crisis. He did that. Okay, and he really caused a recession. But you know what's a good thing? He stopped the inflation. So between a recession and inflation, he attacked the inflation first. Because if you don't deal with the inflation, okay, if you don't deal with inflation, the recession, if you don't deal with the inflation, the whole economy will hurt more. Recession can be recovered easier than inflation. That's at least what the conventional wisdom is. So we got option number one is to slam the brakes. Option number two is called tap go, tap go. You know, you all drive a car, zoom, 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 then tap the brakes, tap the brakes. Sorry, it's like tap the brakes, you go tap, sorry, like that, the car go, this is what I call tap go, tap go, tap go, tap go. Tap go, tap go, tap go is basically say, I increase interest rate, then after I relax a bit interest rate, I put a interest rate, and sell the signal, that kind of thing. Now, this kind of thing would be good because if it is less likely to induce a recession, but it will risk prolonging the inflation. Okay, so you notice that interest rate rise too much, recession. Interest rate don't rise enough, inflation. Really devil and deep blue sea. As an economist, we hate this situation. This is the one that now Jerome Powell, as the Federal Reserve Chairman, struggle the most. Okay, that's why he says he exactly used the word a soft-ish landing. He want to create a soft-ish landing. It used to be called a soft landing, meaning that I'll step on the brakes but not too hard, so the economy slow down, but soft landing. But he said now I think I can forget about the word soft landing. So he used the word soft-ish landing. Okay, soft-ish landing, and which basically means that he is prepared for a significant economic slowdown if necessary in order to fight inflation. On this note, remember I ever said in my previous talk before, and you can watch that in my YouTube channel, that it is interesting to note that what kills inflation is inflation. What kills inflation is inflation. Because when the inflation goes up, prices goes up, more producers will try to produce more goods to serve the economy. There's a huge increase in productivity. There'll be a lot of goods as a supply, and the prices will go down, right? Also, when you increase when there's an inflation, okay, you also cause interest rate goes up, and then therefore you drive down demand. Drive down demand, you cause prices go down. So generally, all these are actually good. So no inflation lasts forever. The only time inflation lasts forever is when the policymaker actually have the wrong policy initiative. When they use the wrong policy. I will talk about that another day. Okay. So everybody ask me now. So Mr. Lu, can buy stock market or not? Can invest or not? Okay. Everybody wants to hear. Give like. Walao, half of you all don't give a like in YouTube. I don't understand. Okay. It's the algorithm is you like first, then more people view. I talk on this already. Okay, anyway. My view is this, okay? My view is this. My take is that the Federal Reserve will likely be conservative. I listened to almost all of Jerome Powell's speech. I listened to almost all of them already. I know his personality from his speech, okay? It would not be, I would know him perfectly, but it gives me a hint. And the good thing about John Powell is that Chairman Powell is that he's very transparent. What he intends to do, he tells the whole world, which I think is important, right? He, as a Federal Reserve Chairman, what you want to do is to be very transparent, right? Very transparent. So of what you want to do, you don't cause unanticipated shocks. Okay, so therefore, I think Jerome Powell is likely to be conservative, meaning that he's unlikely to be aggressive in slamming the brakes. I think he is more afraid of unemployment than inflation. That's my personal take, and I could be absolutely wrong in this, okay? But between unemployment, okay, between unemployment and inflation, I think he's a lot more worried about unemployment than inflation. Now, is inflation, I'll give you a few signs why I say so. During the COVID pandemic, okay, he already signaled that he's going to do QE unlimited. That means he's going to print a lot of money to ramp up the economy, even though inflation is going to increase above 2%, because 2% is the long-term Federal Reserve target. He says that I'm going to increase I'm allowing the inflation to increase above 2% so that the average is 2%, right? So he's more accommodative of inflation. Okay, he's more accommodative of inflation. What he truly hates was unemployment. So that's the first sign. So I think the Federal Reserve is most likely to be conservative. Okay, more like conservative. Okay, and the second thing is that right now there are already strong signs that inflation rate is coming down. Okay, he do not need to overreact. You do not need to overreact. So as a result, I feel that, you know, what's looking ahead is bright. Not bright, super bright, but I think it's brighter. Okay? So, Mr. Lu, are you sure or not? Yeah, are you sure or not? Okay, let me just say this, okay? Yes, let me just say this. Yes, okay? Half of people in YouTube will give a like, okay, never mind. What are the risks? And let me just highlight, the risks are the same. Okay? The first risk is that now the war with Ukraine is now 3 months long, okay? Between Russia and Ukraine, and there are no end in sight. The Ukraine-Russian war is far from over. The good thing is that the fight is now narrowed at the Donbas area, at the eastern Ukraine side. But the war is far from over. This war is far from over. Okay, far from over. I'm going to be talking a lot about my investment strategy, especially when we hit more like yes. The second thing is that the China COVID policy is likely to prevail. Okay, yes, right. It's likely to prevail. The Chinese, I suspect. First of all, there's a lot of people now within the Chinese government now having internal fights within themselves, arguing that is the Chinese is it right time now to lift up the Chinese COVID policy? I suspect Uncle Xi Jinping as an old man is very afraid of the virus. That's why he said if I can I'll sure die. So 怕死, and he himself his own fear because of his own fear control wanted to kill the COVID outbreak in China. Okay, this is my personal view. Have there been very smart people in history, very powerful people in history in the world, especially in China, adopting stupid policies in history? Were there? Of course, especially in China. Very smart people doing stupid things, right? And if we can write a book called Why Smart People Do Stupid Things. And especially when fear and greed and power all come into play, then they don't make the best of decisions, right? Now you can see Singapore COVID is over, so I don't think I don't think it's that big a deal, right? I don't think it's that big a deal. Okay. Let me. Sorry. Okay. One of the largest risk is this. One of the largest risks is this. Right now, we are fighting against inflation. If inflation slow down, okay, to a level where we have a soft landing, that's okay. But if inflation slow down, and the brakes are hit too hard, you incur a recession. Okay, if you incur a recession, what happens? Then we have another problem. The market will crash again because of recession. Now it's the reverse. Okay, so there's a inflation, and then the opposite of inflation is recession. Both fears are in the market right now. Okay, and therefore I would like everybody to realize that. Thanks everybody. I can see the lights going up, and now got people help me drive lights. Okay, thank you. So whether is it inflation or recession, okay, at the extreme drives stock market down. So therefore, what are the risks right now involved is that the Ukraine-Russian war is far from over. The Chinese COVID policy and their lockdowns is far from over. These two will continue to drive supply side problems, and as a result, supply chains are locked up. Wheat, grain, corn, all these get reduced. Chicken prices goes up. Malaysia stop exporting chicken. Indonesia say I don't have enough chicken to export. Singaporean chicken rice seller kaubu. My favorite Tian Tian Lai chicken say no, I will sell roast chicken only, no more bai zhan ji. You know the kind of problem, yeah. So all these problem is a result no, of all this. So the last risk that we have is that even if inflation is over, then you kena recession, there's a risk as well. Okay, then you kena a risk as well. Okay, go karaoke, eat chicken rice. Is it? Okay. So a strong signs inflation going down. So I hope you all can see right now. The risk involved. Okay. So in my talk so far, not yet 400. It's 399. Yes. Anyway, just joking. So in my discussion so far, I share with everybody. Okay, I share everybody. Oh, there are 400 likes right now. Thank you so much. Okay, yes. Hey, don't stop, don't stop. Don't say 400 and stop. Okay, I will come in this. Okay, yes. Right. I'll talk about it in the next. Okay, that's in the slide called "What will Mr. Lu be doing?" Okay, and this one I purposely didn't put a slide. What I'll be doing. Okay, yes. I think the key is this, okay? First of all, I've discussed so far why the stock market is now rising. The second thing is that what are the risks involved, all right? So the stock market is rising because there are signs that inflation is cooling down, okay? There's signs of economic weakness, and therefore people don't think the interest rate will rise up so much. The risk involved right now is that Ukraine war is far from over, and the chicken rice. And the Chinese COVID crisis is far from over. Okay. And last is that if you hit the brakes too hard, you get the recession. You don't hit the brakes hard enough, you get inflation. Okay. So all these cause a lot of chaos. So what should we do? Right? What should we do? Okay. Anybody want to hear what Mr. Lu wants to do? Okay. Please give a like. Okay, and say me. So I understand. Okay. Any questions so far? Okay, now we've got 754 people. Please, people just join in. Please continue like. Yes, momentum. Me. Okay, like me. Okay. Invest chicken farming. That's a good one. Yes. Okay, invest chicken farming. Yeah, Esther. Yes. Okay, what should we do? Any questions so far? I can entertain some questions before I go to the investment strategy. Okay. Eat pork lah. Malaysia cannot eat. Who said Malaysia cannot eat pork? There's so many Chinese there. Yeah, okay. Okay, let's take a step back, no, and let's yes, let's speculate. Let's speculate right now, okay? Let's speculate right now. What will happen, okay? I already taken a view. In fact, I've taken a view all the while, okay, and nothing. I'm quite open about it. First of all, I think that the biggest, the biggest, the only answer to the inflation problem is a huge rise in productivity. The biggest solution to the inflation problem is a huge rise in productivity, meaning production. Okay, and therefore, at this juncture, if China, all the problems will go away. If UK, all problems go away, that will solve problem. But even if those things don't go away, if there's a huge rise in productivity, the problem will go away. And productivity increases over time when there are increase in profit opportunity, right? So right now, there's a huge surge in inflation. Everybody is rushing into areas where there's a huge huge margins to be made. Where all the huge margins we make are actually at the lowest, at the lowest tier of production, the raw materials and all this, and so over time, as an increase in productivity, increase in production, as the supply increase, inflation will go down. And what I'm saying is that inflation will be tamed over time for sure. What I'm saying is that the inflation that we face right now will not be forever, which also means that the price crash that we see now will not be forever. The question is, will there be more decline or not? Will there be more crash or not? The answer is I don't know. I'm more optimistic than pessimistic right now. I've always been. So therefore, if I have my way, this is my investment strategy, okay? I've said it, I've already done it. Someone calculated for me and I didn't calculate. I've actually invested $250,000 so far, okay? That's a lot less than what I did for 2015 and 2020, okay? 2015, 2020, I threw in $1 million over the crash, okay? But I actually, spaced it out. Now, right now, I'm toggling between QQQ and sorry, not QQQ. I shouldn't say QQQ. I'm toggling between Nasdaq and S&P 500. Okay, I'm buying first S&P 500. You saw that I threw in about 150,000. Then I threw in Nasdaq about 100,000. So about 250,000 right now. Now it's time to flip back a bit to S&P 500. Okay, and then I would do this depending which one crashed more. Okay, and I think that over time, this whole volatility will continue. Okay, will continue, and it will continue in a very big way. Okay, so the wave of crashes, I don't think is over, but it may not crash that deep again. So whenever it crashes, okay, whenever it crashes, I will go in and buy. When it crashes, I'll go and buy. Think about it, say, wow, there are 800 people now watching on YouTube. Okay, thank you. For those of you who come in, I appreciate a like from you. I say again, for me, it's very, very easy. I don't think the whole crisis is over, but I think the signs are optimistic right now. Okay, signs are optimistic right now. I'll buy whenever there's crashes. And whenever it crash, okay, I'll buy. When it crash, I'll buy. When it crash, I'll buy. Okay, and I'll space out buying. I believe that the solution of this whole inflation problem is a massive rise in productivity, and that will take time. Because that will take time, which means that I got a lot of runway to go. A lot of you are shooting questions right now. I will answer them after I describe my strategy, if you all don't mind. Let me put it crystal clear. The whole problem to the inflation problem will go away when there's a massive rise in productivity and production. That kind of thing takes time, but it will happen for sure, and it's really happening right now. Which means that between now till then, there'll be a lot of fluctuation and movement. We cannot catch the lowest point. The only thing I could do is whenever there are crashes, I'll buy, or crashes, I'll buy, or crashes, I'll buy. Someone asked me in what ratio. S&P 500 and Nasdaq. I will pick roughly, not roughly 1/3, 2/3. Okay, 1/3, 2/3. And I've described this before. Why 1/3, 2/3? Is because the kind of the market cap, of S&P 500 and Nasdaq, I think is that roughly that ratio. Okay, not perfect, but roughly the ratio. So I think S&P 500 has more value stocks and Nasdaq has more growth stocks. So the Nasdaq is a lot more volatile. The S&P 500 is less volatile, but it's still volatile as well. I roughly take a 1/3 and 2/3 position, and then I'll go in. Okay, so when market crashes, I'll buy. I will anticipate a problem. It's still what if the market rise? Why market rise? I would, in this whole dip, up to maybe something like that, up to this leg, I will still buy as well. Okay, when there's a reversal. You will never know whether this reversal is like that or like that, right? So again, right? So whenever the signs are clear that market has recovered, okay, I would still continue to buy on the rise, and then I stop. Okay, but that's me. I didn't say you must do it. You ask me for what I'm gonna do. That's what I'm gonna do. I've done this in 2008 financial crisis. I've done this in 2012. I've done this in 2015. I've done this in 2020. This will be my 5th time doing it. Okay, and the more you do this as an investor, okay, the more you are seasoned. Mortgage my house and all in. Are you mad? Right? Don't do that. Don't do that. Okay. Now, when you buy in the stock market, and you buy in the stock market, you buy with cash that you can afford to set aside, and it won't cost you misery when you lose money. Okay. So I'm buying in tranches. What I do, I thought that is a very safe. That's a very safe approach. Okay. Try not to touch leverage, try not to touch leverage, especially when you're not familiar whatsoever. Okay, I think it's very, very dangerous. So you understand where I'm getting at. Okay, with this whole buying the crash, buying the dip kind of approach, I think I've done it for 4 rounds. I think this is essentially what I'll do. Okay, it will not be easy, but remember, I have one big plus that some of y'all don't have. I got a strong financial safety net in my CPF. People call me Mr. CPF for a reason. Okay, although nowadays I talk less about CPF, but the CPF form a huge foundation of safety net that I encourage everybody would have. Okay, yeah. Okay, a lot of people ask me about endowers, how to use endowers to buy Nasdaq. I don't think an endowers can allow you to buy Nasdaq. Endowers, you can use your CPF to buy the S&P 500. I don't think you can do that as well. Okay, you can buy the Nasdaq with that. Some of y'all say, can I buy Apple? Can I buy Facebook? Can I buy Google? Whatsoever, China stock, whatsoever. I repeat again, I don't believe an average investor. Maybe you're not an average investor, but I am. Okay, an average investor know how to actually an average investor know how to pick stocks. Okay, Mr. Lu, how many tranches will I be looking at? I told you that the last few market I whacked close to $1 million inside. This time around, probably standing by that kind of amount, but I cut it up into 50, 100,000 kind of a bite size. Okay, and then going. Okay, so that's kind of what I would do. Okay, my only fear is some other business opportunity come about, like let's say I have to invest in a company, or I have to do an M&A or company or whatever that drives some money out. So barring those kind of excitement that can come, I'm looking at breaking up this. So I'll be looking at probably another maybe 10 tranches or something like that. Yeah, 10 tranches or something like that. Okay. What's my track record? EF, I don't know what email. What's my track record? Okay, I'll answer some questions right now. There's a lot of questions coming in. Okay. Can you a lot of questions run up and down. Can you please ask a question again? At what level S&P fund will I stop buying? When there's a very clear signal that the market has reversed and have risen by a lot, okay? If it dip is like that and like that, I will still buy. Once it go up, I forget it. And it's very clear what. Let me say this, and this will be my most important statement of the night. Okay, most important statement of the night. Okay, after I say this, okay, please support me. Okay. From my experience, the best time to buy stocks is unfortunately when everything looks the worst. The best time to buy stocks, can someone write this down? I'll try. The best time to buy stocks is when everything looks like hell. The best time to buy stocks is when everything looks like hell. Okay? This is my experience again and again and again. Okay? The problem is that when hell hits, nobody have the courage to buy. You see the dilemma. The best time to buy is when everything looks like hell, but when hell hits, nobody dares to buy. Okay, and that is why it's important. Okay, it's important that you actually put some measure. Someone asked this question, but doesn't it look like hell right now? I want you all to go back. Again, this is another thing, okay? Everybody asks me, wow, will the whole stock market crash, to some degree, like, 50, 100%, whatever, Is it hell already? Currently, the hell is nowhere compared to the pandemic hell. Nowhere close. Nowhere close. Remember, in the pandemic, we are even worried about life and death. Here, inflation, what life and death? Are you so fearful now? In the pandemic, people besides just achoo only, you fly off, okay, like Superman, man, right? So therefore, by association of fear and greed, fear, okay, I personally don't think that this is the same level of crisis. In 2008, the stock market went right deep down to like 50%. I don't see banks crashing and collapsing. I don't see people losing jobs. I don't see people jumping off building. I don't see things like that happening. Right now is really a threat of inflation, and the threat of inflation, okay. And the threat of inflation, however bad, okay, cannot be as bad as the 2008 financial crisis, or as bad as a COVID pandemic. Okay, so let me give you my best statement again. Okay, the best time to buy stocks is when everything looks like hell. If you agree, okay, cool, okay. Right. Okay. So right now, is this the worst? I don't know, but I think it's quite bad. But will it get worse? I don't think so. So I'll continue to just nibble my way in. Okay. Yes. Right. Yes. Okay. Okay. Yeah. Okay. A pandemic crash is not. It's a straight down. Okay. Okay. Wait, I'm trying to look at all the questions. How to differentiate between dip and crash? I think there are some definitions, but maybe I think crash is something when it's when there's a crash more than 20% or something like that, which I think some of the stock market before this rise actually hit that level already. So it doesn't matter. It was a crash. Okay, it was a crash, and right now, right now we're on the rise. Okay, is it going to last? I've talked about the whole talk. Spend the whole talk on it. S&P 500. If you buy the ETF, it does pay dividends, but not a lot. I say again, you cannot ask for dividends and ask for growth. It doesn't exist together. If you want dividends, you must forsake growth. If you want growth, you must forsake dividends. Okay, Mr. Lu, when you nibble your way down to buying stocks, can you inform us what have I been doing? Okay, every shot that I fire, I announce, especially in YouTube. Okay, therefore everybody in YouTube right now should especially click the follow and like, because whenever I go live, some of you all don't get alerted. You all must click the follow and like and the bell or something like that. I can't remember. Then you all get alerted whenever I fire one shot. Every time I fire in this round, I always announce, especially on YouTube. Okay, yeah, I announce all my shots so far. Yes. Okay. Okay. What? Okay. Any more questions? I think the interest rate rise is a scary part. 1970 interest rate rise more than 12%. Yes, but I don't think we will reach there. Okay. Yes, I don't think we reach there. Yes. Okay. When to take profit? Recently, I have a change in philosophy on profit taking. I used to think that we just stay invested forever, or whatever. I have a slightly different philosophy right now. Okay. I think that sometimes in life, you can nibble part of the profit out for diversification. Okay, so if let's say your profit, your whole stock rise from 100,000 to 1 million, right? You may want to take some out and diversify to another asset. That's part of asset diversification, which I don't do very well in that as well. Okay, so therefore, I think that profit taking is done when we do what we call rebalancing. We rebalance into property, into bonds, into CPF, into other thing. Okay, so therefore, I think it's profit taking. It should be part of a rebalancing effort. Okay, part of rebalancing effort. What? Sorry, I can't catch your question. What is a good percent of war chest to nibble in? Wow, I can't tell you, man. If I set aside, let's say, if you have, reserve as a strategy, reserve roughly, Chris Tan said this 6 to 9 months or 9 to 12 months of living expenses. The rest, I think is something you start preparing as a war chest, and then you unload along the way. That's all I'll do. Sorry, the question here, gosh, I missed it. How long do you think the bear market will last? I don't know. Okay, as I said, when the inflation problem will go away when there's huge rise in productivity. Okay, huge rise in productivity. When there's a huge rise in productivity or a sign of a huge rise in productivity is when the inflation problem is over. But generally, the right bottom of a market is when everything looks like hell. So you can't tell. Okay, it's usually the best time to buy. Okay, thanks for 827 people come in. Okay, 511 likes. Thank you. Okay, you can do more. See, today we hit almost a record high because everybody helped me, right? You say multiple times, what's your return each time? Return to what? Return to what? Annual return on stock market over a long period of time whatsoever, right? I've said before the S&P 500 generally grow at about 8%, 7-8% a year. After that, the Nasdaq grow at about 10 to 12% roughly. That's a long-term view that I try to have. Okay. When do you do rebalancing? When something goes out of whack. Okay. For example, if I intend, let's say, half my portfolio in stocks and maybe 30% in bonds, for example, and if the stocks grow to, let's say, 60%, then we'll pare it down to half again, sell off, and then come onto the bonds. Okay. Inflation will also go away when recession happens. Yes, but that's another problem. Will crypto collapse? Cause stock market collapse? I don't think so. Because the crypto market is confined largely to the world of speculators so far, in my opinion. But the day when the mainstream banks and all this start absorbing crypto, and then when it collapses, then we have a problem. That happened in the 2008 financial crisis, when they were dealing with with those what do you call those asset mortgage instruments that are quite deadly. Yes. Okay. You're welcome. Thank you. Any thoughts on bonds? I think bonds are an important part of our portfolio. The reason why bonds is important is this. Okay. When a stock goes up, the bond goes down. When a bond goes up, the stock goes down. Generally speaking, there are times like the last few months where all went down together. Okay. That's when there's extreme fear. But in times it will go up like that. So it kind of cushion off each other's effect, all right? So create some stability, and I think that's why it's important. How do you know productivity goes up? I think there are signals in the economy when the production start happening or whatever. The minute China say, let's give up, I give up the zero COVID policy, the whole stock market will rocket. Whole stock market. Eventually, I think they'll come to that. Eventually, I think they'll come to that the conclusion. Okay. Do you suggest do you self-employed people to top up CPF using cash or create safety net? I do encourage self-employed people to top up SA. Okay, I do. It's not SA, it's not enough. What's your strategy on picking bonds? I usually pick US Treasuries. Okay, there are two types of treasuries. There's a short-term strategy, one's a long-term strategy. If you guys are keen, I have a talk on that. But US Treasuries, there are essentially two types: the 10-year bond and the 20-year Treasuries. Okay. Yeah, US Treasuries. Okay. How to buy bonds? You can buy just like US stocks like that. Okay. Low birth rates across all countries counterintuitive will outpace economic expansion. The low birth rate in all major countries, I don't understand your question. Okay, yeah, I don't really understand the question. Temasek Astra is not that kind of bond that will do this kind of effect. That you buy for returns. Why US Treasury? Because US Treasury have this kind of effect, okay. Any other questions? Okay, I'll take another few questions and I'll call it a day. Those 800 people on YouTube, we appreciate I really appreciate. Okay, then you help to promote more of the video, but I really appreciate it. Okay, does the electronic chip shortage impact productivity recovery? Of course, that's one of the huge reasons why productivity has a shortage. Why would you buy bonds unless you want to hedge volatility? That's exactly what I want to do. I want to hedge volatility. Okay, that's exactly what I want to do. What's your take on China government bonds? They are listed on the stock. I'm not familiar with them. I don't like to touch anything China. Okay, just me. I could be very wrong with it. I'm just not familiar. Not familiar. Don't buy. What do you think of recent crash on bonds and stocks? An anomaly rather than new? Yes, it's an anomaly. Only in extreme fear and extreme interest rate rise when both goes down together. Okay, rarely do they behave this way, but it was a lot. Why will we never see the lights of pandemic low based on current inflation recession? I never say that. It could test the low of the pandemic as well. But I'm just trying to say that the sentiment of fear is not the same. Do you think that the era of low interest rate is gone and we are back to high interest rate? I don't think so. Okay, we'll go through highs and lows of different periods. Okay, of different period of interest rate. S&P 500 rise to 415. Should we buy now or should we wait to drop? Okay, I can't tell how the stock market will do, but what's stopping everybody whenever it crash, you buy something, it crash? I just don't. I would just say I do that. Okay, I do that. I cannot tell you what you should do. I do that. Do we buy penny stock? No, I don't. S&P 500 and Nasdaq. That's it. These two. Okay, that's all I do. Okay, yeah. It's a broad base. Oh, sorry. MSCI World Index as well. That's another one. What's the outlook of China? I think the outlook of China is very good. The whole economy is bound to rise, but I don't buy their stocks. Okay, yes, because their China stocks is not equal to Chinese economy. Do you think we are going through correction rather than recession? The correction is a stock market phenomenon. Recession is an economy phenomenon. They are two different things. The stock market is not the economy. Economy is the stock market. Okay. Got money buy, no money see. Okay, there's no fear in crypto and so okay, so just like when there's a sale, we buy and keep. Okay, is recession in Singapore coming? By the way, very difficult to employ suitable staff. Exactly, I have the same problem. Very difficult to find good staff. Okay, is a recession in Singapore coming? Hard to say. The PM himself said it's likely come, but I don't think so. Like what you say, I cannot find good staff. Yeah, good staff is really hot. It will slow down, but just to cool down the economy. Okay. At what price will you buying S&P 500 next? You will know when I buy. I make an announcement. Okay. How much do you think is enough to retire? Well, that's a tough question, right? For me, if I were to retire as you really do nothing, okay, I think I can survive with a few $1,000s, okay? How do you overcome negative emotions when you see losses? Don't see, don't know. Yeah, okay. Don't see, don't know. The best thing is after you buy, you forget. Don't go and look at it, okay? Can recommend the bonds that I don't like to recommend anything. Go to my 1865 Telegram group. There are 24,000 people there or 27,000 people. I can't remember, okay, how many people. But there are a lot of community experts there who will give you some advice, okay? Yes. Okay? Sorry I came late. Did you discuss what percentage you put in the asset class? What do you follow? Do you follow Ray Dalio all-weather portfolio? Okay, Ray Dalio all-weather portfolio is a very complicated portfolio method. I do follow it, but I choose not to discuss it because it's too complicated for most people. Okay, right? So, will the Treasury bond crash? The U.S. Treasury bond has already crashed. Yes, has already crashed. 27,700 people. Wow, I didn't know that. Okay, yes. Okay. All right, good. Okay, I hope that Isendao is a good platform to buy S&P 500 using cash. There are a lot of alternatives out there other than endowers for cash. Don't limit yourself to it. Okay, cashback or miles credit card. If you like travel, why not? Okay, yes. I'll cut your hairstyle tomorrow. It's cool. What hairstyle? I got no hairstyle. I got no hair. I've been telling myself, look at Tintin. Last time you all read this comic book called Tintin. That the reporter have a lot of adventure. I look at Tintin right now. Okay, I just need this white little dog. Yes. Okay. Yes. Yeah, Tintin. Okay. Okay. Yes. Why not keep cash instead of bonds? I buy bonds. I say again for that counter-cyclical effort. Okay, cash can't do that. Yeah, Tintin. A lot of us have your hairstyle, especially when you reach my age when there's not enough fertilizer on your head. Oh wait, okay, this one I'll more gossip more in the Premium More channel. My wife found this hair tonic that stopped hair drop. Mine too late, no hair to drop. But you stop the hair, yes. Okay, I'll talk about that in Premium More. That one, there's the Premium More, we are more gossipy there. YouTube more serious, so I'll try not to talk about that. Okay, Singapore's bonds can buy, but it doesn't have the effect. Okay. You do remind me of Tintin. Okay, cool. All right. Okay. Yes, TLT is one of them. Yes. Right. Haven't showed the facial mask tutorial. Okay. Which brand? Okay. Wait. I knew Facebook asked that question. Okay. All right. Cool. Okay. With this, 9 to 7 emergency fund. Where should I park it? Bang. All right. Okay. SIA good to buy. I don't like big stocks. High chance of losing money. Okay, yeah, good. Okay, what's this? How about oil prices more than US 100 affecting inflation? Yeah, oil prices will go up, always affect inflation. Ask B to do group buy for the hair loss product. Okay, yeah, okay. Do more like Li Ka-shing than Tintin. No lah. I wish I'm like him. Okay, that's all good returns. Okay, good. All right, good. Okay, great. Okay, so with this, thank you everybody for joining. Okay, thank you everybody for joining this talk. I hope everybody find it useful. Okay, and really do your own study, whatever. my investment strategy I share with you doesn't mean you need to stick to it. But I think my investment strategy is what I generally think is a safe and proven strategy, at least for myself. Okay, so I will hope that you guys will think about it, and then I will see you again in the next talk. Okay. Yes. Okay. Yes. Try to do a talk on bonds. Okay. All right. Cool. Okay. With this, okay. Thank you. No, thank you, everybody. Thank you everybody for joining. Okay. Thank you. Okay. Yes. Yes. We have celebrated with cake before we flew off. Okay. And the mother gave her some very nice stuff. Okay. All right. Okay. With that. Thank you. Okay, thank you. Okay, thank you. We'll see you next time. Okay, see you next time. Thank you. All the rest of questions you can write to me directly. My email is in my slides. Okay, slides is in slides is in the description. So join. For those people who are in, remember click follow and like and the bell so that you know when I'm activating my next shot into the stock market. I will make an announcement. Okay. Good night, everybody. Yes, good night. Okay, Mike, good night. Joyce, good night to you. Supply, good night. Sarah, good night. Okay, all right, I'm gonna off my YouTube right now. Okay.